Good morning. It's February 10th, 2024, and this is the Wall Street Weekly Wrap-Up with your host, John Newquist. Another big earnings week, not as big as last week, but we have a lot of major stocks that we watch, and let's get into it. First, we have to talk about our holdings. ARM. Wow. Beat by 4 cents. That's not a big beat, but the guidance, holy smokes, up 28 cents a share. They're talking huge amount of guidance, and the stock market liked it. This went up 60% and then dropped down about 50% at the end of the day. That's a big jump. And a lot of people talk about being in it, wanted to be in it, talked about how good it was, but they weren't in it. We were in it since it came out, and that's a big jump. We're over 100% already since it came out. 100%. We're doubled our money in it. Why? Because they make the Grace Hopper CPU the best AI CPU chip out there. They partner with NVIDIA, and the Grace Hopper platform is one of the best platforms. It's always getting better, and they're in everything from Apple phones to Samsung phones to everything. So the market finally woke up. You had all the time to get into it, but if you're going to get into it, wait till it comes back down a little bit more. But it's a great one. We're already off to a heck of a start this year. And we added ELF this year. We sold a couple stocks, so we'll get into those a little bit later. ELF, we watch, revenues rose 84%. You would think this is a tech company. This is a beauty supply company, as Janet says. This is a company that makes modestly priced good products. And they're doing well. Much better than Estee Lauder, Ultra, all the other beauty supply companies. This is a company that's doing well. The chart is good. We're getting in. It's at a high on Friday. It's got everything you want on it right now. Will it get the momentum? We don't know. It could be like Lululemon, be good for years. But, let's get in on it. The indicators, everything was a little bit lower for most of the metals and commodities. Crude oil's up. My gasoline price went up 50 cents. Went up 50 cents higher. Gasoline went up 50. It doesn't work that way, but it just was a lot. The big one in the big chart is natural gas. Remember when it was $3 and people said, oh, it's going to go to 7 again, like over here? No, it's below 2. We're making record oil in the United States, and natural gas is a byproduct of the drilling, and it is going to be plentiful, as we found out. And the NASDAQ, up still the best this year, but the S&P 5,000. Where were you Friday when S&P closed at Friday? Well, we were watching, we were trading. It is a big day. It's a big milestone. There's 5,000, the next one will be 10,000. Up 14 weeks of the last 15. The first time, you have to go back to 1972 with the Nifty 50 to kind of have that kind of advance in there. So you can see it's broken out. People think, well, it's overheated, it's oversold. Yeah. It's oversold, and if you're not in it, you didn't make any money. You make 5% on a bond a year. That means talking about 0.5% a year, and we're already up double digits. So Lilly, we look at it, we like Lilly, but boy, this is a screamer. It just goes up and up and up, and this is a parabolic jump. Here's a real issue. It's 28% revenue growth. That's good. That's exceptional. They are the number one pharma, healthcare stock, whatever you want to call it. It is good. It's just pricey, and we don't want to buy it when it's super pricey. Here's your 200-day moving averages. You'll get a chance when the 50-day moving averages hit it a couple times during the year. That's when you want to buy it if you want to get into it. But right now, pretty expensive. Caterpillar is a manufacturing stock we watch because it's one of the largest. It has a lot of customers worldwide, and the revenues went up 2.8%, which is profitable. The chart's a mess. I mean, it's hit low, then we jumped up, then went back down. But you know what? I always call it higher lows, higher highs. So, if it gets down again, right over here was a lot of, confluence, but it's not a bad company. If you're able to get it down back in the 280s, maybe nibble on it. We're going to watch it because we need industrial. Toyota, number one auto company right now. I haven't seen Volkswagen's numbers yet, but right now 9% revenue growth. Revenues jumped 23% a year. Earnings growth. This is good. This is why we sold Tesla, because if Toyota can do it, all the other companies going through. It just shows when I was watching the head of Toyota talk about the hybrid models, which they specialize in, are the hot seller. And as the Ford person said, they want hybrid first, gasoline second, electronic, EVs third. And guess who's making a lot of hybrid vehicles? So Toyota's doing great. That's the company we want. Again, it just jumped. I mean, nice steady incline, but we didn't expect this kind of jump in revenues. So they did good. Congratulations. Tesla, we sold. Again, up 3.5%. Again, lower lows, 1, 2, 3 lows, lower highs. That's not a good chart. But, as long as they were making money and increasing revenues, that's good. But when we see Toyota do almost 8 times better, we're not going to be in Tesla anymore. And you can talk about being a technology company, but real issues. Elon is focused on Twitter/X, and he's not focusing much on Tesla anymore. And that's, there is time. How much is he spending on Tesla? 10 hours, 20 hours, 30 hours a week? But, he's focused on this Twitter stuff. And, really, the board's going to have to deal with this because this is not good for the company. Now, if Tesla gets down to $85, we're going to be buying again. McDonald's, number one, franchise place over the United States. Subway gives more than they do, but I'm talking about some serious dollars per franchise. It's McDonald's. Revenues went up 8%. That's a good number. That's a good number. It tells you people are buying stuff. You get a lot of negative publicity because some of the meals are over $15 with the fries and the drink, but they're watching it. They're watching what sells. They're always putting stuff out there that's good price. The food is, like I said, it's McDonald's. It's not bad. Like I said, we're seeing a lot. We're going to see what McDonald's comes up with in the summer. They've been doing a lot of partnerships with celebrities, and that has been paying off well. Ford, not so bad, 3.5, just like Tesla earnings revenue growth. The industry liked it. Look at this little pop over here after the earnings and stuff, but they're having problems. They're losing money on EVs, and somebody says, why would you make EVs when you're losing money on them? But they think it's a market, and we'll see. Chipotle, again, revenues went up 15%. Again, this is the restaurant retail business is tough. $2,600, man. This stock is expensive. When you think about where it was. I remember it was like $200, and I thought it was expensive. So, what I know some days, But revenues rose 15%. Again, another one has jumped onto earnings growth. Comps mean that 8.5, they're doing better than the industry. But it's $15 to go eat a simple bowl at Chipotle. So we're gonna see probably a quarter where it just has a backlash. There comes a number where you just don't buy anymore, and we'll see it with the Starbucks or Chipotle or any of these high-priced stocks. Snap didn't have a bad quarter. Revenue went up 4.7, but the guidance was horrible, and that's what dropped it. Look at this top, multiple top, can't break it, drops down to the 200-day moving average. Now we bought it at 7, we sold it at 10. You get down to 7 or even down to 8, really, this is your bottom number here. We're going to probably buy it because it's growing. It's still making money. That's what people don't realize. As long as it keeps on making money, we want to sit there and buy a profitable tech company. I see Snap. I don't really use it a lot, but I watch it. People post on it. It's kind of like TikTok of the Americas. Got a lot of videos where people are doing stuff, so has a chance. And like I said, if it gets so cheap, it'll happen. PepsiCo was a real surprise. Did not go and make a continual revenue. I don't know how many quarters in a row it was always profitable. It dropped 6%. And this is what I call the pushback against raising prices with smaller amount of chips in the package and everything. Finally, the people pushed back. They bought less Pepsi, less Doritos, and the revenues fell. That's a big miss. I don't know. I don't want to say. I've been on Pepsi. We made 51% at this company, but that's a big hit because what you're doing is you're not anticipating what the market's doing in real time. You should have been picking up around about maybe October that you're starting to see sales drop, and your high-priced, small quantity packages are not selling so good. And that's where people are starting to buy either the the brand names that are cheaper, or they're buying the store brands. And this is an issue Pepsi has to think about. We're seeing deflationary. All the other companies are talking that the food prices are cheaper, the commodity prices are cheaper. Pepsi was holding the line, making the money. They're giving us a 7% dividend increase, but that's not the issue. We want to be a company that's growing consistently. So we're going to wait for Coke, see what it does, and a couple other ones. Our REITs, WPC, you know, people don't like the number. I mean, it's a REIT. That's a sector that's been beat up. Everybody's thinking the commercial real estate's collapse is coming, which it may not. Maybe a slow, drawn-out death, you know. But Carrie's still making money. That's the key thing. And then we're going to keep it until it does. You know, I mean, you know, we want to be in all sectors. And, you know, again, you could put everything in tech, but then you could die like tech. You know, we win there in 2022 where it was down 35%. Under Armour, same way. Revenues fell 6%. You know, we own Kohl's, and Kohl's sells a lot of Under Armour. Alexa, stop. Kohl's sells a lot of Under Armour, Nike, everything. And so when Kohl's is doing good, and you're not doing good as Under Armour, that's your problem. Your products are not doing well. And, you know, it's usually kind of, you know, I kind of thought, well, maybe Nike's not doing good. Under Armour repeated the same. So somebody's doing well. It's like Lululemon, but who else? Who else is selling at Kohl's that they're doing good? Somebody must be increasing revenues. Can't be all Lululemon. But somebody's doing well, and that's where we're going to look around, see what we see. We watch the earnings. Again, that's what we're looking for. We're looking for somebody. If it's going over 8%, that's not bad in any kind of retail. You know, again, we go into our biotech, ARWR. You know, these are hard to sit there and look at it. You know, it's negative cash, negative earnings, but it's the pipeline. What are they working on? Medicine to treat obesity, metabolic disease. That's the hot area. That's the stocks that do the well. Scheduled for clinical trial at the end of 2024. You know, 3 phases in a clinical trial. We don't know. It could die out in phase 1, and this thing could go down from $30 to $5. You know, but this is, again, we're small position in these biotechs. We picked a basket of it. We got 9 of them left. They came out with earnings, and again, it's positive. You know, somebody's working on the area. If it passes a phase 1, it's going to be a jump. You know, we'll see. But you know, these are tough areas. This is an oral pill that maybe. ConocoPhillips, one of our 2 energy companies, that and Exxon, good earnings. I mean, holy, you know, when you think about, we make 13 million barrels a day, and Conoco is 2 out of that 13. That's huge. They're just junking, munking, and flowing out the oil. I mean, it's incredible. I mean, I remember when it was $1 million a day, and that was a record out there for Conoco. Now it's almost $2 million a day, and that's why the oil prices are lower. You know, they're not going to get to that high price as long as, you know, they can keep out pumping oil. The earnings per share is huge, you know, $2.40. I mean, they're just making a fortune. And, you know, again, oil went up, and in the mid-70s, they're all going to make money, as long as it's above 60. So, you know, again, another company that's run well, does good, and we're keeping it. Disney, we watch it. You know, one time we did own Disney, you know, but here's the problem. Subscribers decreased. Well, can't pay for everything online. I mean, I have so many people that are on all these multiple onlines, and they're over $100 a month. And I thought, wow, that's just like cable again. Except you just divested everything, and you bought components, and now you're back up your total. You know, so I have Disney because I want ESPN Plus, and that's what I get it for the UFC fights. But earnings were good. They're profitable. The revenues fell. There it is. I don't care what you want to say about Bob Iger, but you didn't deal with increasing the revenues. And you get, you know, people can say, well, the movies didn't have a chance to do well because of the writer's strike. Well, you know, you got other streams of revenue, and it's not doing so good. So I think it's flat. Everybody liked it. It jumped a lot. You know, increasing the dividend, share repurchase. These are things that help to boost the stock up, but really, if your revenues aren't up, you're going to be flat, and that's how many years of flat or negative we're going to deal with. And again, if we look at the heat map, again, we've sold Pepsi and Under Armour. We bought Elf. Look at the Google, NVIDIA, and Amazon, Microsoft, all stocks that we own did well this week. You know, again, what was down this week overall, utilities, you know, that's the sector we're in, and it's just tough, you know. I mean, you just look at it, it's all red. Again, consumer staples and Coca-Cola and Pepsi, all negative this week. And, you know, again, a lot of healthcare stuff. It's all uneven. But we're doing good, and we want to keep on doing good. We're watching for the growing stocks, trying to pick the best of the sectors and go through it. And appreciate everybody sticking around and subscribing. Hit the like button. Have a good week. Stay warm. See you later.